Hi, Joe Giovanni here from Kettle Pond Institute for Debt-Free Money. We're trying to reply here on Whippoorwill to his reply to Nick, and want to make a little comment about what Nick said, maybe differentiate between a couple of the things that Nick said and something that you said, Whippoorwill. I think Nick, kind of said the same thing in two ways, or was trying to say the same thing in two ways, on the one hand and on the other hand. And I think he misspoke a little bit, because when he said that the Fed can't increase the money supply through quantitative easing, I think what he was trying to say, and I think he sort of corrected himself later, was to say that they can't do it without increasing debt. So let's talk about quantitative easing for what it is as monetary policy. Whenever the Fed decides that it wants to use its extraordinary powers as the banker, they can, in fact, increase the money supply. But there's two things about the way they can do it. Right now, the only way that they can increase the money supply is by issuing debt. Okay, and that is to say, they can either lend money to any of those corporations against their assets. Okay. Or they can buy something, okay, in which case the Fed gets an asset there, whole asset on its books that, as you correctly pointed out, at some point later on goes into the economy. So the net result of that is increasing the money supply, but it's also increasing the debt, okay? So, just to clear that up, what the Fed apparently can't do is to issue debt-free money. And what we're about is the government needs to be able to issue debt-free money, whether it does it through the Fed or the Treasury or whomever. That's what needs to change about monetary policy, because Nick's right. The problem we have is too much debt, which is leading to debt deflation, and all the monetary easing really does is slows down the process of deflation. And until, people get the right handle on what money is and how money works, it's going to be the dog chasing its tail as far as trying to come up with enough quantitative easing to actually get people back to work again. That's not going to happen. We need a new monetary system that's not debt-based. But now to Whippoorwill's point, again, you were correct to say to Nick, well, what happens to those assets? And I think that's where Nick corrected himself later. That's what I thought anyway. But you also said, something about if the Fed can't increase the money supply, not only through quantitative easing, I assume, but through its monetary policy powers, then how does the M1, 2, 3 sum change from in the 60s from X to, nowadays to 1,000 times X? And first of all, the answer to that is not a good metric to use, the sum of M1, 2, and 3, since M2 includes M1 and M3 includes M1 plus M2. Basically, you're summing something by adding things once or twice or 3 times into the sum. Okay, now I guess twice into the sum. But really, since M3 is so much bigger than the rest of those, just using the growth of M3 is just as telling. Okay, that is to say, the money supply grew by gargantuan multiples of what it was in the 60s, and if the Fed can't increase the money supply, how did that happen? And the answer is, of course, there's private debt. I think you know that. The Fed don't create the money, it's the banks that create the money. The banks use fractional reserve banking to create money when they make loans. And that's how we have debt money. They make loans to create money, and without people taking out loans, that's where we're at right now. That's kind of the name of the deflationary cycle, is people are not taking out loans. Now, some people want to take out loans right now, and the banks won't lend the money because, see, the banks know that there's already not enough money out there to pay the interest on the debt that's already out there. There's not enough money in existence. So the sooner the banks, own up, if you will, fess up, the sooner they're going to have to write down a bunch of the assets that they have. It's mostly the investment banks, but it doesn't matter because they're the ones who control Wall Street, and even though they are not related to the Fed, they well, they are now because a lot of them became commercial banks, but they still set the tone. They still actually drive this ship of money today. So that's the answer to that. I just wanted to address that really quickly. That the fact of the matter is that the Federal Reserve does not create money, okay, except through quantitative easing. At all other times, when it's buying and selling securities, Nick's right. The original money for those securities was already created at some point in time, got used at some point in time to purchase a security which the Fed can buy, okay? But the money's already there. So the Fed buying it just, changes the nature of the assets. It does not increase the money supply, okay? Basically takes that money, puts it to work for the government instead of the private sector. So we should try to be clear about that. But Nick has opened an important, I think, somewhat nuanced understanding about how money's working. And whenever that happens, from my perspective, it's good because it's basic ignorance of how the money system works. That's the biggest problem that we have in society right now. And that's why we continue to kick the can down the road, continue to try to build up more debts, continue to take from working class people whatever wealth they've created with their labor, and take it back to the financialized sector, the only growing sector, and to the rich. And that's how they do it. They do it through the money creation process, the money creation and destruction process, because when they issue loans to create money, when the loan's paid off, they extinguish the money. There's no permanent money. So just wanted to kind of address that point, okay? The answer for Nick's thing is quantitative easing does increase the money supply, but it increases it by debt, so it does nothing to solve the problem of too much debt, okay? And to your point about, well, if the Fed doesn't create money, how did we go from billions to trillions? And the answer is through private bank money creation. That's how all money is created in the fractional reserve debt money system. So let's chat. Thanks.